is it time to kind of rotate out of the U.S. into other parts of this equity market now?
Well, Yvonne, I think over the last few years, big overweight in US has been very good. It is what a lot of clients have done. But now there is a huge concentration in the US equities of investors. And we know within the US equities itself, that concentration has grown to a few names. There is definitely a risk there. And we think if there are other growth catalysts out there, it's worth considering. And we do feel places like Japan and India in particular are very high conviction. And then on a tactical basis, we think China today still remains very attractive for the more nimble investor. So it's not about going underweight US, but getting a bit more to a neutral position from a long-term overweight that people have built up. And moving that cash out of the US towards other growth areas, I think makes a lot of sense going into a political end of the year.
We talked about how India is one of your favorite markets here right now. We've seen 2 months of outflows out of this equity market of late, just given the volatility around this election. Now that we're seeing maybe it's going to be a projected landslide victory for Modi, is that likely going to correct? Will foreign demand come back into this market?
Yvonne, we love this space, to be honest. It really is a great opportunity. There is so many factors that are supporting the India long-term story. And what you saw, as you said, you saw outflows coming out of India, largely from foreigners. But that was largely also filled in by local buying. India buying India. And that is a real stability point, a real kind of a big tick for international investors, which say, OK, during uncertainty, does the local market prop itself up, hold itself up pretty strong? And it was a clear yes. We do think that this is what big international investors who want to move some money to emerging markets to diversify out of their big concentration in US and Europe. This is some great story. A stable government, a very popular government, a huge growth opportunity, 8-9% for the next 20 years. That's phenomenal numbers. And you travel to India, you can feel the energy. There's so many people going back to India because of the energy. This is a space that we have been long for a while, and we continue to believe buying the dips is an interesting opportunity. It's also a space that is not as transparent as, for instance, the US when it comes to the stock market, the top 50. There is a lot of opportunities below that. So it's a lot of opportunity for active management and finding the value. So India definitely remains one of a high conviction place to deploy some of the concentration in maybe US and Europe that's built up over the last 5-10 years and start diversifying that out for global players. And that's really going to help move the market to the next stage.
Well, take us down that market cap scale then. So it's largely been for foreign money. It's largely been an IT play, maybe infrastructure, maybe less so consumption. So within that 50 stocks, for example, I know you can't talk specifics, but give us a clue of what perhaps might be chapter 2 to this rally.
Well, I think in the space at the moment, we're going to go for the biggest names because, as you highlighted, the locals, the Indian investing in India is quite diverse. When it comes to foreigners, they're going to go for the biggest, most stable names to start off with. That's typically how the big pension funds and asset managers, when they start deploying into a new region. So it's going to be the largest companies within the space that are going to benefit initially, and then it's going to start diversifying out. So you're going to see asset managers that have been in India for a long time. They're going to say, OK, we understand where the money is going to go, but we also understand the other opportunities. So that's where it gets interesting to look at some of the other sectors around manufacturing, around the industry, around the financials as well, which we think is going to be an interesting play within India. But it really is just following the flow of money, the new increments out of China, potentially out of the US. There's a lot of opportunities for amounts to go into India, which is still a relatively small market globally.
Yeah, tell us a bit more about that money flow from China to India. Is that still something that's quite pronounced right now after the rally that we've seen in China?
Well, I think the rally in China has been off a very low base. We know that the fundamentals still remain in question. I think it's been very tactical in nature. You've seen some pullbacks, but it's been a great rally, and we still like China from a tactical perspective, but we haven't seen that shift in the economic fundamentals just yet. That's going to be when we will start seeing long-term investors go back to China and buy and hold for long periods. At the moment, the money is very fluid within China. So for larger, tankers of investors, which take a longer time to turn around, they're likely looking for an EM asset class with a bit more stability at the moment with regards to the stock market, a bit more clarity around where the growth profile is going to come from and how they're going to do that. Whilst there's been a lot of effort in China to kind of focus on growth, it's not as clear as what we're seeing in India today. So there is going to be some long-term investors that are going to be shifting their long-term asset allocation to China, to more India, and are going to keep their tactical asset allocation to China whilst the momentum remains. So very active in the EM space with money moving in and out of India and China, but we do feel stickier money will remain in India at the moment.